Hey guys, what's up? Welcome back to the channel. Thanks a lot for showing amazing support towards our video. Today we'll be discussing about how to save tax in a private limited company. So as we all know that a company is basically an artificial person created by law. With that, law also gives certain rules and liabilities and obligations and rights and duties and all. So one of those obligations is paying taxes. So every person who's earning should pay tax and not avoid tax, but rather plan taxing, right? So if you do proper planning of tax, you can save some bucks. So let's see how that works. The first way is to draw a director's salary. A director is basically a person who is looking after the company and taking care of the company and its performance. So you can give salary to director, and that salary is allowable expense in the private company's expenses. So in that way, what you can do is, instead of giving profit in form of dividend, you can give profit in form of salary to the directors, and that way it will be properly distributed. The other way is to give sitting fees to the directors. So basically you can give sitting fees to directors for attending the meeting, and this sitting fees cannot be more than a sum of rupees 1 lakh. Okay, and this is also allowable expense in the private company's book, so it is beneficial that way. And there's one more thing that you should keep in mind while giving sitting fees, that 10% would be the amount of TDS deducted. So for example, if you are planning to give 80,000 fees, sitting fees to the directors, and out of that 8,000 would be deducted as TDS and remaining 72,000 will be given to the director. Depreciation on assets. When you purchase an asset, it will be shown in the capital side of the balance sheet and not in profit and loss of the company. So if you are expecting that the asset which you have purchased will be generating revenue for a period of more than 180 days, then it will be fully depreciated, and that will be beneficial for saving tax. Preliminary expenses. What exactly is preliminary expenses? तो preliminary expenses basically वो expenses है जो founder ने किए हैं before incorporation of the company. कोई भी कंपनी बनाने से पहले कंपनी एग्जिस्टेंस में नहीं होता. So what happens is कि जो फाउंडर है उसने एक्सपेंस किया, लेट्स से फॉर इनकॉर्पोरेशन ऑफ द कंपनी, फिर कंपनी का MOA, प्रिंटिंग, सैम्पलिंग वगैरह जो भी अलग अलग एक्सपेंसेस उसने किया है, उसका बेनिफिट आप लोग ले सकते हो बाय गिविंग दैट एक्सपेंसेस इन द बुक्स ऑफ अकाउंट्स ऑफ द कंपनी. तो उस तरीके से आपको टैक्स में बेनिफिट मिल जाएगा. टॉकिंग अबाउट रेंट एक्सपेंसेस. So if the property shown as a registered office is in name of one of the directors, what you can do is you can make a rent agreement with the director. So ultimately that will be amounting to an expense for the company, and that will be beneficial in saving tax. Salary expense of a family member. अगर आपके फैमिली मेंबर्स भी आपके साथ कंपनी में है, तो what you can do is you can give salary in their name. ठीक है, इस तरीके से क्या होगा कि वो एक्सपेंस होगा एक कंपनी के लिए एंड आपको टैक्स में बेनिफिट होगा. Next is the most interesting expense, entertainment expense. Yes, you can even take advantage of this expense and show in the books of accounts, and for that you will get certain tax benefits as well. Talk about meeting expenses. So for a business, you do various meetings with clients, events, and you also travel to various places for which you have done certain expenses. Now these expenses are done for the company itself. So what you can do is you can maintain a proper account of all these things and take advantage of this thing while filing the tax return. Director's vehicle expense. So generally a director travels in his personal vehicle, right? Whether being a car or two-wheeler or any other vehicle, right? So there is certain amount of fuel and repair maintenance which are borne by the directors. This expense can be shown in the company as the expense is being done for the company itself and can be marked in the books of accounts. By following these measures, you will be able to save nearly 22 to 30% of the tax of the company. So that's all from my side for the day, guys. Today I, Pulkit Kinkhabwala, signing off. Bye bye, Shabba Khair, take care.